Good morning and good afternoon, everyone, wherever you are. Ladies and gentlemen, today we are starting over the next episode of Wall Street Station, the channel that is focused on giving you the most updated things and revelations about the crypto, about stocks, about indexes and commodities. So if you enjoy the topic and the main theme of our channel, let's subscribe to that. But today we are just delving into the fascinating world of automotive innovation. In the spotlight of today's episode will be the NIO, that is a pioneering innovation and the electric vehicle manufacturer that is making significant waves in the industry. But as of late, it has slumped. Why it has slumped? Why this valuation has been ramped down? And that's the main topic that will revolve around today. So thank you very much for joining us as we explore this cutting edge news, sustainability of the product of NIOs, and also fundamentals, technicals, sentiment, everything you need to know, and macro. So fasten your seatbelts as we navigate the exciting landscape of the stock right now. So that's for the beginning, and at first let's find out what's the transformative role of this company in the mobility world. So in order to find this out, that's needless to say that NIO is the main competitor of Tesla. Tesla also has some peers that is right now are trying to catch them up. There, among them, there is a Li Auto and BYD, and definitely the NIO. Yesterday, we've talked about XPeng. XPeng is aiming at another, not that luxury type of a market, but the medium luxury sector, as I may say that. So NIO is in one of the shelf that is consisted of BYD, Tesla, and Li Auto. So that's kind of a competitive field, if you ask me. And for now, we are jumping right now to what has caused a latest dump of the stock. So NIO, if you just jump to a chart, NIO has reached a bottom of 8.46 as of yesterday, and right now in the pre-market is about to get somewhat aligned valuation, but it should rebound right here as we have met the floor at the significant support. But about the technicals in a moment. As a reminder, we are right now live, so if you have any questions, just don't hesitate, don't pull back yourself, and just pause it, and I'll get back to this after the presentation will be over. So NIO shares has slumped as much as 14%, the most intraday loss since March, as the conversion premium offered is seen as attractive enough for investors to sell the stock. The conversion to bonds is enough for investors to sell the stock and buy the equity-linked notes. So let me clarify this. For those of you that don't know anything about convertible notes, so it's not a dilution. You might have found in a social media that this convertible notes will be the dilution of the stock as a whole, but right now it's not dilution, just borrowing more money, which is available at a low interest. And why won't you do that? To make the cash book look stronger, and you can build right after the more infrastructure with that. So they only have to pay the brand need to pay them in shares in 2030. So if they are not able to pay the loan, if they won't be able to pay the loan that I admit that is highly unlikely. So convertible bonds are the one that may eventually push some turmoil, may push some turmoil on the stock in the short and medium term, whereas in the longer term horizon, it's another move forward for the company. But there are some also drawbacks to this, as yes, it may happen that this bad type of a scenario may eventually realize when they won't have this ability to pay in shares in 2030, and they have to pay the loan. So taking consideration on that, we may right now go forward. So Chinese electric vehicle of NIO is securing 1 billion through a 2-tranche convertible bond issuance, and they intend to use the funds to reduce debt. So how it may weigh on the stock valuation right now, I do find that that's the yes, you can find right here. That's the situation on the stock market, where normally those strong hands right now are buying this despite the sell-off, and they're not really taking care of what the panic it was. For those type of a hedge funds, crashing the stock at this low valuation is the one that may push them to purchase even more chunk of it. So when the retail is panicking due to a possible stock market dilution, the strong believers are buying at the great prices. So I wouldn't doubt if the Katie Woodard or other type of a grow stocks investors, large investors, will eventually buy at those valuations. We may find it out in the reports for the third quarter. So NIO right now aims to enhance the car offerings with improved software connectivity, and planning to release self-developed mobile phones. That's why they need this cash in order to thrive, and as the financials of the company are not really putting in favor them in a short and medium term. In the long term, that's a bet that we may find that will eventually pay off to them. So we are jumping back to our presentation, and let's find out what the financials are and why this convertible bonds may be useful. So NIO, in terms of revenue, is right now, after fourth quarter of 2022, in a downturn. So it means that still many of investors are not willing to buy that company that revenue is falling, as well as operating margin that right now is getting a more downturn spiral. Also, what's sluggish is this cash to debt ratio, despite it's right now arrowing within this area of 150 and 200s. We are right now at cash to debt ratio that is diminishing in its value. Despite all of this, the market still believes, and analysts believe, that the NIO is going through just a temporary turmoil, and that's what justified by this analyst projection. So let me know in the chat or comments whether you find the NIO to be traded higher or lower than it's right now. That will be kind of interesting to juxtapose it and confront it with what others are saying. For me, betting for the company right now, when it's the data, financial data, is not very optimistic. It's kind of a unreasonable, but if we may just show, it still have a chance to get this Tesla effect, and that is why still traders are betting and investors are betting for NIO to thrive in the future. So when it comes to its peers, we have gone through this metrics yesterday, but that's the one I wanted to just point out for the NIO investors as well. So in terms of comparison to Tesla, its delivery of cars is still at 1/20th of what's going on with this American company. So it's still very far from it. Li Auto is a bit better, but still Li Auto have a long tail behind Tesla, a long tail position behind Tesla, and revenue is better than it's at Xpeng, and also the very similar to Rivian. That the delivery is at half of what NIO presents. So when it comes to juxtaposition and also comparing the deliveries with prices, we may just get to current price to sales ratio, and right now we can find that NIO is in one of the most favored position. So that is why the NIO, despite this very poor data, with this, I would say it will be updated as this data out of the beginning of a week, so it may even drop lower. So therefore, even though the financials are not very optimistic and not very skewed to the upside, there are many of the hope of investors that it will bring, the company will eventually wave above the surface in the years to come, as Tesla was unprofitable throughout many years. Despite it was thriving. So what about the NIO underneath? And we need to have a look at registrations. And at first, let's have a look at Europe. As I said, the delivery is of NIO is mainly hitting the Chinese market right now. Let's have a look at what's going on in Europe. And in 2023 is the one that it may boast itself with the greater amount of cumulative registration. So it's giving us a chance that eventually when those supply chain disruption environment will fade away and will eventually get back to this recovery phase of economy that we are to some extent already there right now. It may thrive even further. In terms of NIO in comparison to Tesla, can NIO catch up the delivery of Tesla eventually in China? Taking in consideration the latest years, this pace of going higher for NIO deliveries is as more and more remarkable. That's why many of investors are betting for NIO to thrive in the next years, and also gain better positions on the EV market. So what about the macro on all of this? So we can find right here that PCE annual inflation rate in relation to Fed policy interest rate is falling. So today we have a interest rate decision of Fed, and this one is expected to get hold. But if we just keep up raising these interest rates, it may even deteriorate the environment for such companies as NIO, even though they delivering mainly on Chinese market. But as we do know, the European and United States market is getting more and more willing to buy this products out of the NIO as a alternative to Tesla and Rivian and Lucid. Therefore, it shouldn't really go this higher interest rates possible decision shouldn't go unnoticed, and eventually is the one that may eventually weigh on the stock valuation. But why? So Goldman Sachs is finding that this pothole of higher CPI rates in the September may push eventually us in interest rates even higher. So CPI report this week reinforced our view that the easy part of the inflation fight is behind us, and inflation will jump, and that may eventually jump. That may bring junk debt default wave. And even though the NEO hasn't let out any of the junk debt, it's still on the radar of the one of the companies that is really reliant on the external funding, and that's why with this interest rate, very high interest rate environment, there is very difficult to get new money for thriving. So even though we are right now going through recovery phase, so it's right here, recovery after the trough, where we have more incentives and subsidies for such of the companies that's out of the growth sector, where government should eventually continue or introduce incentives such as tax credits or grants to encourage EV adoption. We are right now going through a still very turbulent phase in the economy, where this recovery may be easy to go through just for the larger companies such as Tesla or BYD, but the NEO still may have some concerns about the robustness of and the dynamic of its growth. So this accelerated investment in EV charging infrastructure right now may revive eventually. And when talking about all of this, we need to admit that it's also crucial to alleviate range anxiety and promote widespread EV adoption. But right now, in the very initial phase of recovery, that will be still not very easy to get these investments from here or there. When it comes to the market, we cannot really scat the things that right now, even though the pause is expected out of the most of the market in terms of interest rate hikes, we are right now going through the situation where this yearly change in margin debt as percentage of total stock market value is getting back to this plateau moment where we may have the normalization of the market environment. So taking all of this, even though these tightening conditions are right now deteriorating the possible chance for growth for NEO, let me just take a sip. We will still supposedly have another fourth quarter that will be positive for NEO as for the most of the growing companies, but we still have this average initial year-end target below the evaluation that's right that we are sitting right now, and that is why we still need to be kind of cautious. But I do personally find the low evaluation, lower forecast as the one that may push the market upwards. So, so to speak, the majority of analysts are always wrong. That's why when the price valuation and price forecasts are skewed to the downside and we are in an uptrend, that's normally a sign that the market will be willing more to climb in this wall of worry. So overall, I have overall a optimistic outlook for what is next to come. But at the end of the day, the most important, the most crucial thing is what the market is about to tell us about all of this. So on daily on NEO, we are right now after real carnage when it comes to valuation. But what's positive, we have got to the point where the price hasn't tested the trough yet. I mean the 8.30, 8.20, and that's where I do expect the rebound to happen. And supposedly we will find out what is the willingness of buying of NEO stock at this dip. If we have an engulfing pattern, that means the candlestick that will be following candlestick that will pierce at least the half of the previous body of the candle, we may have the sign, the real hallmark that those smart money are right now stepping in. So that will be very interesting to watch what will be the reaction of today. But I do expect that even though we will just hang on here for a while without any specific of great reaction right there, we may find a floor on NEO right here. Despite it that we have had financials that still haven't really reflect the positivity at all, and when taking a longer outlook, we may have still be in a downtrend. But this spike higher, I do find that it will be the one that is right after the downward trend, giving us a higher odds of rebounding out of the 712, and right then push the valuation of the stock upwards. For now, however, I wouldn't really stick around catching a falling knife. That's why I do rather stay cautious and just observe it from a sidelines. But as I said, this level of 7.89 and this one 8.47 are the very strong supports that shouldn't be broken to the downside. For us, maybe we'll just slide lower to 7.17, 70, and afterwards have a nice rebound higher to close the gap, supposedly at 10 points, and right afterwards decide what's next for the stock. But for now, I wanted to get you to what the crowd is thinking about NEO stock. So we are right now in valuation at 8.60, around 8.60, and what does it mean to us is that on calls side, the calls are right now betting for with the highest open interest at $9 to get even up to $9.50, whereas puts right now are more skewed to the downside. So it means betting for downward movement right from here is rather unreasonable, but still there are many believers that are finding that NEO should be traded higher. So for now, we need this balance between puts and calls to eventually find out, and that's what we are seeking for. Is this price reaction and also the price valuation where those open interest among calls and puts will eventually find its plateau. Right now we are in this tug war game where those bulls and bears are trying to find a possible point of equilibrium. All right, so when it comes to NEO as a whole, final thoughts are that the company plans to use raised cash to pay off old debt, and for NEO investors, the good news is that the company plans to eventually pay off this old debt and strengthen its balance sheet. However, the convertible debt may result in share dilution for existing shareholders, but if you believe in a stock that's one of the smallest problems, right? When the bad news stems from NEO's ongoing need to take on debt due to its inability to generate profits independently. So there are many naysayers that are telling that NEO is in this spiral of debt, and it will only increase its problems to the future, hinting at potential future debt offerings and associated market sell-offs until sustainable profitability will be achieved. So let me know in the comments section below the video what you think all of it, and what's your stance, whether you are buying or selling at this valuation. And from me, that's everything. Thank you very much for watching. If you enjoyed, hit this like button, and we are seen tomorrow with another very interesting portion of news. And there will be those that will eventually discuss out of the professionalist standpoint. So hopefully you subscribe to the channel.